Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and you know that college is going up well beyond the rate of inflation. For so many of you out there, though, you're barely making ends meet. Really difficult to put away enough money to save for your kids' college. We've got Sandy Botkin with us now, CPA, attorney, former trainer of attorneys at that dreaded agency, the IRS, author of 2 books, Lower Your Taxes Big Time and Achieve Financial Freedom Big Time. And he's got a number of strategies that you can use if you didn't save enough to put your kids through college. Sandy, welcome back.
Oh, it's a pleasure to be back.
As always. So you're kind of screwed, you think, because you didn't save when you should have for whatever reason. And there's, God knows, there's a lot of reasons, some of them even legitimate. While you're busy living life, things happen. You can't put away enough money. I was fortunate, managed to put 3 kids through college with no debt, with savings and current income. But man, what percentage of kids are going through college now with debt? I mean, it's I read somewhere 50%.
It's well over 70%. Yeah. So it's over 70%.
Huge.
And and some of this debt is just enormous too.
Yeah, and we had Obama on yesterday, basically looking for loopholes so that the kiddies can go bankrupt and discharge that debt. Now, granted, some of these for-profit colleges, even some of the nonprofit colleges, when they get you a degree in basket weaving that they know is going to be useless, Sandy. Now, granted, you should have the common sense, or your parents or somebody should tell you, look, that basket weaving degree just probably is not going to earn you back the money that it cost. Maybe it's not such a great idea to major in.
I'm not sure that's true, Kerry.
Yeah.
Colleges today, they don't guarantee jobs. These are not vocational schools that teach you how to drive a truck or teach you to do medical stuff. They don't. They don't guarantee you a job. And what is basket weaving? If I major in English, is that basket weaving? Is that getting me a job? If I major in political science, if I major in philosophy or art or math, the kids have to basically, to me, the goal of college is not necessarily get a job. I hate to say that. To me, the goal of college is to give you the skills that you need to succeed in life. And that includes possibly getting a job or starting a business.
Sure. I mean, I think life isn't just about getting a job, for sure. There are things more important. You need skills. You need to be able to read Moby Dick and enjoy it and understand what it's about. I think their liberal arts education really is important, but they also need to be guiding you in the right direction on how to develop a career if that's what you want. And I think in a lot of respects, college has failed, but assuming that college is the direction that you've set your heart on, that your family has made the commitment and you're in it together, let's face it, and the money isn't necessarily there, short of getting those expensive college loans that are going to be with you like the plague for the rest of your life. A lot of people will never pay off their college loans till the day they die, Sandy. What do you do?
Well, I have said this in my book, Achieve Financial Freedom Big Time. I've said it in my blogs. I scream it to the top of the ceiling. Nobody listens to me. The answer is, under no circumstances do you take out substantial indebtedness that you can't pay off within roughly 5 to 8 years. No circumstances. And if that means giving up your dream school because you got to pay this huge debt and instead going to a community college, heck, go for it. If that means going to a state university instead of going to Tufts or going to Cornell, go for it. If that means working part-time in the summer or taking a part-time job so you don't have sufficient debt, then that's what you need to do. But there's no way you should be graduating with an undergraduate debt. Graduate's a different story, like medical school, things like that. But with an undergraduate debt, in my estimation, over $30,000 to $40,000 a year, maximum. $30,000 to $40,000 total.
Right.
And that's lifetime total. Okay. And if you're incurring more than that, you're doing something wrong. And unfortunately, I was just reading an article how these kids are taking finance courses in college, and they like it. They like these personal finance courses. The colleges are great at offering personal finance courses once you get there, but I don't know of any school offering finance courses before you get in.
Hey, that is a great point. And, Sandy, when you go, if you're elderly and you want to get a reverse mortgage on your home, mandated, the government requires you to go get an education course and get counseling from a financial professional on getting a reverse mortgage.
Well, it's even more important than that. It's gotten, I don't know if you know this, there's been a recent change in the reverse mortgage rules. Reverse mortgage, just for everybody listening, is where you basically get the bank lending you money, and you get to live in the house if you get the right loan, like a federally insured loan, for as long as you live. You cannot be foreclosed on. The only catch is that you've got to keep up this is the catch they don't necessarily emphasize. You must keep up the taxes, you must keep up the insurance, and you must keep up the house. Well, normally you didn't have to worry about credit checks to get these things. Well, now, in order to get a reverse mortgage, you have a tougher time because you have to establish you have sufficient credit and income to be able to pay off the taxes, the insurance, and maintenance on the house.
Correct.
That wasn't always required before. It is now.
So, point being here that the government's requiring people to get counseling for reverse mortgages. Why not have a requirement that you got to go get counseling, financial counseling, before you go start taking out loans in excess of X amount?
I think that's an excellent idea. If you can convince the school districts to do that, that would be a fabulous idea.
I mean, you just inspired me, and I'm going to go on a mission for financial education because it's ruining your life to take on this burden of debt.
I subscribe to a college forum that I'm a writer for. I do a lot of things for them called College Confidential. And mostly people go on that forum, usually are high-end kids who are looking for an edge to get into the very top schools. And I'd say 95% of the people on there are being advised by their counselors and by people there to go to the very best college you can get into, cost be damned, and if you have to take out all kinds of loans, too bad, as long as you get into the best school possible. And that's as idiotic as I can possibly imagine.
Oh, Sandy, that's the worst. You and I both know it. I mean, I went to Pace University, perfectly good school. Obviously, when you and I went to school, it was $100 a credit. I think it cost me a total of $12,000 to go there. I made it back the first year. Obviously, Payback is a little bit slower nowadays when the price of college has gone up 15-fold.
$50,000 a year for a private school. That's correct. Well, you don't go to a private school.
Right.
You can't afford it, go to a community college.
Yeah.
You can't afford it to go to a private school, go to a state school.
Exactly.
The bottom line is you got to be a lot more realistic. And there's one more thing I want to take into account here, and that's your major. If you're going to major in English, or you're going to major in art, or in women's studies, and to me, women's studies has a very different connotation than it did when I was going to college. There's no way you're going to be able to pay off a huge debt. If you major in engineering, for example, you have a better chance. You still shouldn't have a huge debt, even under those circumstances. Right. But at least you have a better chance of making a higher income.
Right. STEM, accounting, anything, science, technology, engineering, math, anything
right,
there.
That type of stuff. Correct.
Right. So be practical here. And internet school. These colleges are offering discounts, haircuts for internet. If you're the kind that can go for online education, something you need to look at, all these practicalities that you can cut down. And you start out at a community college for the first 2 years, and you can overload credits so that...
I don't normally recommend going to a school where you take education through the internet. It's not that I think you get an inferior education. In fact, I think the education is the same. I know someone who's teaching there and teaching it at Hopkins. So I think the education is the same. But I have not seen employers view it equally as a brick and mortar school.
Yeah, well,
for some reason, people who graduate from Kaplan University and University of Phoenix and stuff are going to have a harder time.
You're right. But starting out at a community college, you overload credits because you're buying them at less than a third of what they're going to cost, even at the state school. And then you do really well there. You can pretty much get into any school that you want and wind up with a degree. You might have to take a few extra credits. All of them might not transfer. But then again, you might get more credits than you think, and you're that much further ahead. And the other thing, Sandy, thing is if you're a really good student in high school, AP courses, all of those AP courses, or many of them, will actually wind up getting you college credits without ever having to pay for them.
Oh, that's so true. My daughter got out of four courses that way. But by the way, one thing about a community college I want to emphasize, most community colleges have a deal with the states so that if you go to a community college and then you go to that state school that you went to that community college in, usually they will accept all of your credits.
Exactly. Yes. Great.
There's usually a deal cut.
Great point. So
be aware of that.
So we've saved all that money, but we still come up short. We still need money. What do you do?
All right, this is for the people who have not saved in advance. And I will tell you now, it is always wiser to save for advance. But let's face it, you have a family, you have expenses, diapers are expensive, you want to have a life, you want to put away for retirement. Before you know it, you don't have enough for college, and college comes very quickly at you. Now what do you do? So here are 5 what I call last-ditch ways that you can pay for college. All right, number 1, and I do not, by the way, I do not normally recommend these unless you are desperate. So let me make that very clear. All right.
Yeah.
Number 1, and that is borrow from your home equity. Take out a home equity line of credit. When you can borrow up to $100,000 on your home. The interest on that $100,000 is fully tax deductible. It can be used for any purpose, including sending your kids to college, and it is fully tax deductible. If it is beyond the $100,000, you may not be able to deduct the interest. You come under the student loan rules, so you want to be careful about that. But that's one way of sort of a last-ditch effort, is using your home's value to be able to pay for part of that loan for up to $100,000. Second method, borrow from your pension or 401k. The problem is if you take an outright distribution, you're taxed on the money. And even worse, if you haven't hit age 59 and a half, you're hit with a 10% penalty, not deductible, of course. But if you borrow the money, then this isn't taxable to you. And in fact, when you pay it back with interest, you're essentially paying yourself interest. The only catch is that the limit is 50% of the accrued balance up to $50,000. So there is a limit as to how much you can borrow from your 401k. And you must pay it back. You can't just keep the money and not pay it back.
Yes.
All right, number 3, withdrawing funds from a traditional IRA. Normally, this is fully taxable to you. However, and there is no 10% penalty, even if you're under age 59 and a half, if the money is used for qualified education expenses for your family. So that's a third way. Fourth way, withdraw funds from a Roth IRA. What's interesting is that funds withdrawn from a Roth IRA are completely exempt if the Roth has been in existence at least 5 years and you are at least 59 and a half. Now, if you're not 59 and a half, the good news is you can still take out money from the Roth IRA tax-free on account of death, disability, or to pay first-time homebuyer expenses up to $10,000. And even if you don't qualify for any of those exceptions, Roth's payout are treated, if they've got a funny treatment, they're first treated as if they came out of your own contribution. So as long as the distribution is less than what you put in, that's completely tax-free and penalty-free.
That's wild. I never knew that.
A lot of people don't know that. That's the Roth IRA.
Yeah.
And the final way is hit up your family for a loan. Consider borrowing from parents and other relatives. Obviously you want to consult a good accountant or attorney because there are some tax traps. You have to pay off the loan. There's a minimum rate of interest you have to charge and so on. But generally, if you borrow no more than $100,000 and the loan is payable upon demand, you avoid what they call the imputed interest trap. You don't have this minimum amount of interest you have to do. You have to treat this loan as if you would from a bank. You have to sign a note. You have to start making payments and so on. You need loan documents showing the interest rate, the payment terms, and so on. So that's really the 5 major ways. But, the bottom line is I don't recommend them. I don't recommend borrowing the money from your retirement plan or using your home to pay for college or any of these options if you can't pay, unless you absolutely can't pay the tuition bill. I mean, the only way I would resort to these approaches if you have absolutely no chance of any other way of paying for college. And even then, I would try to send your kids as inexpensively to school as possible so you don't have to use these techniques, or at least use them to the minimum.
The only other one I'd add to that is if you've got an insurance policy. And
you can borrow from the insurance policy if you have a whole life policy. But you and I may differ. I don't normally recommend whole life policies.
I don't think it's normally a wise move, but so many people have them. And
yes, they do.
And then they don't think about borrowing necessarily. Sometimes people wind up with a whole life policy because they started out with a term policy and they converted because they became uninsurable or something like that, or they added.
Could be. I mean, that could be. But I will want to caution you about borrowing. I'm going to make one caution about borrowing. If you borrow too much, and between that and the interest accrual exceeds the cash value so that you have virtually almost no cash value, at that point, your policy can become in default. And once it comes in default, you owe tax on all the accrued interest throughout all the years on that policy.
True. Yeah, there's always those little things to trip you up. But
so that's very problem.
It's something that's available if you have it, and something to consider. So, yeah, things you really need to consider, but always better to save in advance and don't get into these loans. Hey, let's talk about what loans are non-dischargeable and which ones aren't non-dischargeable.
Well, most loans you can discharge in one way or another, usually through bankruptcy or otherwise, with one big exception,
right?
And that is student loans.
Yeah.
Student loans, and actually that's not totally true. There's actually a myth there, by the way. But for the most part, student loans are very difficult to get rid of and to discharge in bankruptcy. The only exception to that, and there is an exception that people aren't aware of, and that is if you have an extreme hardship where there is no possible way you can ever make a payment on that loan, then the loan can be discharged in bankruptcy. Now, the courts have looked at extreme hardships as being where you cannot work for the rest of your life, basically. So if you suddenly go into a car accident and you are unable to work for most of your life or for a large number of years, you can then file for bankruptcy and that loan will probably be dischargeable. But with that exception, you normally cannot discharge a loan in bankruptcy. Now, there are some other exceptions that I want to get into. If you take certain jobs to the federal government, like you want to work in certain low-income areas or teaching for America or certain things like that, then the federal government will pay off. Right.
So the federal government will pay off part of the loan. CIA and other.
I'm not sure whether working for the CIA works. I don't know. But the bottom line is certain jobs, they will pay off your loan. They will discharge it over a period of time if you work in that area. Yes. I know doctors' loans can be discharged if they work for the federal government and they do certain things with the government and so on. Same thing is true with the military. So you want to take a look at options on how you can get some of those loans discharged. But I can tell you that bankruptcy, for the most part, will not work unless you are so physically disabled that you cannot work at all.
Yep, that is true. So other tax issues. You said there's a way that you can write off your clothing?
You're like this. Wouldn't it be great if you could deduct your sports coat or blouse as well as the maintenance on that sports coat and blouse, like the dry cleaning?
Yeah, how do I do that?
Well, with proper planning, you can. And here's the story. See, one thing I've said about tax knowledge, and I published this in my blog on TaxBot, which is kind of an expense tracking program. It's also in my book, Lower Your Taxes Big Time. The purchase of clothing, first of all, is deductible, but you have to meet one of two rules. Any one of the two. It's got to meet one of two. It's either got to be used for protective purposes or it's got to be distinctive for a particular profession. So, for example, if it's readily available on the street, and you can go to a party in it, and nobody knows that they're unusual or they represent some kind of costume of some type, then it's not deductible. So let's go over the rules. What do they mean? First of all, clearly protective is easy to identify. Those are things like the helmets that construction workers wear, the special glasses that you'll see welders wear. Anything protective is certainly deductible. But distinctive is another problem. How do you show something is distinctive? Distinctive, by definition, really shows what business you're in. So, for example, the medical smocks, you see the doctors all walking around, and that would be distinctive. There's no way they're probably going to go to a party without everybody knowing you're a doctor. So that one would be deductible. But is there any other way besides getting like a medical smock? Here's something that's really good. If you have a stitched-on logo found on the front of your clothing, logoed clothing, that's viewable to the public, not inside. People ask me, well, can I put it in my underwear? No. It's got to be on the front, outside of your clothing. That item, whether it be that shirt, the blouse, or the sports jacket with the stitched-on logo, would be considered distinctive because that shows what firm you are, what business you're in, And the purchase of that item could be deductible if the logo was on it when you bought it. And if the logo was not on when you bought it, if you put it on afterwards, you can deduct all the dry cleaning, all the maintenance of that item. It's fully deductible. And that's true for sports jackets, blouses, shirts, all of those things. Mm-hmm. Now, that's a stitched-on logo. If you put a clip-on, you might have the same benefit, but the problem is you can always clip it off and nobody would know what business you're in. So clip-on logos won't work. It has to be stitched on. But if you buy stitched-on logo to outfit, let's say you buy a sports jacket where you have this, you put on the logo when you bought the jacket, but the purchase of that jacket is deductible, and since there's now a logo on it, you can deduct all the dry cleaning every time you dry clean that jacket.
Never knew that. So obviously uniforms, police uniforms, that type of thing.
Correct. Definitely. Uniforms are distinctive, obviously. Fireman's uniform is distinctive. Things like that. Nurse's uniform, distinctive. Those are fully deductible. That's correct.
I love it. I just love those things. They make sense. You know, sometimes the tax code's so logical. Other times it's just insane.
Well, you know, for the most part, it started off logical. The worst thing, I don't know if you know this, the worst thing that ever happened to the tax code was a stripper by the name of Fanny Bryce. That name ring a bell?
Yes. She was a stripper at the Silver Slipper, but she had her ways and means. Yeah.
That's exactly right. We had a guy who was head of the Ways and Means Committee by the name of Wilbur Mills.
Yes.
Wilbur Mills was probably the last great congressman to really understand the nuances of the tax code. He just knew good tax legislation. He just understood it. Yeah. Well, the problem was one day Wilbur got drunk and he was with Fanny Fox, a stripper. And so he got busted for all this and he lost his job. Yeah. And ever since then, they've been putting in all kinds of changes to the tax code that in many cases don't make sense, are usually for political purposes, or for some other reason that doesn't make sense either. Subsidies, and that's how we got the code the way we did. It's all patchwork.
Corporate welfare, individual welfare, social engineering, and all that wonderful stuff.
Yeah, and there's no logic to it. There used to be logic, but not now. It's more for political reasons rather than for logical reasons.
Yeah, I remember that. He drove into the Potomac and
correct.
Yeah,
it's right here in the Washington D.C. area.
I remember it. Got a little trivia there. And you're right.
And that was the worst thing to ever happen.
Yeah. He was really a fine legislative draftsman. He didn't just put any crap in there. It really had to earn its way in there. And well, the question is, how do we get this stuff out? But that's not our job here. Our job here is to help you navigate your way through, make the most of it. And that's
exactly right. And that's exactly right. And so that's why when you buy clothing, get a logoed outfit, put on the clothing when you buy it, and now you can deduct the purchase of that outfit and the shirt or the blouse or the jacket. And don't forget, the dry cleaning would also be deductible every time you dry clean that item with the logo.
That is great. Hey, Sandy, books, your tracker, your tax tracker. Tell us all about that, how we get it.
I got three major books, actually. One is called Lower Your Taxes Big Time, which a lot of this information came from. And we just updated, so it's really up to 2015. Great. The second book is called Achieve Financial Freedom, again, big time. And that deals with a whole variety of different issues. That deals with things like asset protection and a lot of things that a CPA should be telling you that aren't telling you, like what mortgage should you get? What are the differences in the type of insurance, and which is the best to look for? What are the scams going on in North America, and how do you limit yourself? And what do you do if you get scammed? And a lot of other financial estate planning issues and probate issues and a whole bunch of other stuff that everybody needs to know. And my final book is called Real Estate Tax Secrets of the Rich. And if you own any investment in real estate or you own your own home, that's a book to know, because that'll put about 8% rate of return in your pocket, increase your rate of return on every property you own. And my final thing is called TaxBot. TaxBot can be downloaded in a few days from the Apple Store and the Droid Store. We just got it. We just submitted it to it, so it should take a few days to get approved. And with TaxBot, it's an expense tracking software that was rated #1 by top 10 reports in North America. It has an integrated mileage tracker with a GPS system to keep track of your mileage. It has an expense tracker with all the tax questions that IRS requires, so you can get it right on your phone, and you never have to worry about an audit because it'll tell you exactly what you need to do to write down. And it has an integrated camera for receipts. So between all of that, you have that peace of mind of never having to worry about an IRS audit again, and you'll reduce your taxes by thousands, which will certainly make your life a lot less taxing.
And Sandy, you said that IRS agents have seen that people have that tracker. They take a look at it and they say, next, please.
Oh, we actually had somebody give us a testimonial, which was really interesting. They were being audited, but they were in the hospital, and they said, look, I'm in the hospital. I can't go to the audit right now, but I've been using TaxBot. This is what it does. I'll be glad to get you my information. If you want, I can email you all the documentation, because of TaxBot, you can literally email everything in the reports. And they just terminated the audit. It was the end of the audit.
That's beautiful.
Yeah.
Yeah, it's like, all right, we know you've got everything. We'll go to somebody else. You're not low-hanging fruit. Goodbye. Hey, by the way, you'll find links to everything Sandy was mentioning on our website, financialsurvivalnetwork.com. When you're talking IRS, you're talking survival. Just go there. Make sure you sign up on our mailing list. We've got some great webinars coming up. And Sandy, always a pleasure. Thanks for those useful tips there on really how to finance and how to prepare for your child's college education. So important, because if they go that route, it's a fortune, and do your best to minimize it and manage it responsibly. Sandy, we'll talk to you again soon. You be well.
You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.